All right, guys. Well, welcome into Sunday study group, our Sunday session, Sunday, October 19th, 2025. I'm your host, Gerardo G. Money Pius. And yeah, this session we will cover, we'll back test what happened last week. We'll provide some strategies and just kind of see how price moved. And then from there, we'll close out with a weekly review of what's to come next. As always, right, these calls are for educational purposes only, so any suggestion it's just speculation. We all trade at our own risk, so please make sure to trade responsibly. And most importantly, right, do not trade any money you cannot afford to lose. Let's go ahead and kick it off. Welcome in everybody else. If I didn't say I didn't welcome you guys. Nico, welcome in. Andrew, welcome in. I'm gonna go ahead and shut the camera down so the video thing will show on the side, and we'll go ahead and kick it off. All right, y'all. So this is what happened last week. This is the markup that we had last week in gold when we went skyrocketed, right? Skyrocketing. One thing that I noticed, right, is price is always looking for balance and then expansion. Balance and expansion. So if first has to create a direction, then it's trying to balance it out a bit, and then it expands again, right? And right now, obviously, gold is super, super bullish, and it's just expanding more than it is balancing itself out, but it's balancing itself out at a very strong rate. I truly do believe that the price is finding ways to balance itself out. And sometimes it just doesn't balance out exactly where we'll think it's going to balance out. Okay. And I'll show you guys an example here of a theory that came back in the past that I think I shared with Daniel and Daniela at one point, where it's very interesting. I'll share here in a second. But this is what we were looking for last week, right? We had a bullish week. Let's go ahead and just go to that area. We had a bullish week right here. Okay. And we were always predicting, right? Where's price going to go based on the previous candle, at least the weekly candle, or sometimes a daily, sometimes it could be a 4 hour, sometimes that could be a range, right? A range of certain price moves. But this is the low, the high, and the 23% was right at the close of that week. Once we go to the 4 hour candlestick, right? I'm using the higher time frame sessions indicator, the setup, where I have two higher time frame candle indicators in one session. One higher time frame candle is set to a week, okay, and then the other one will be the day. So right now, on the 4 hour chart, only the weekly candlestick shows up, and there goes the range. We see. Is this what happened this week? It's very interesting. See, if I go back to the weekly candle, yeah, if I go back to the weekly candlestick here, obviously price open here, it closed here, and then goes to high. So this little movement right here is very interesting, right? Because in the lower time frame, that is our pullback, right? That is our pullback. So it started with an impulse, here goes a pullback. So a lot of times, right, I got taught this in the very beginning, where whenever you see, like for example, okay, you see this right here, right? Let me do this. Okay. You see this, and you see this as the open, and that's the close. Well, you see this candlestick, and you say to yourself, that's a strong candlestick, correct? Right? That's a strong candle. Would you guys agree that this is a strong candle? It is, right? It's a strong candle. Let me see if I can get a good color here. Yeah, it's definitely a strong candle. Okay, so bullish candlestick right there. If I can draw it today. Let's do it like this. Okay, strong candle. All right, but what if I draw this kind of candlestick? what would you guys say it is? So we have the same open, the same low, but then we have something like this. Okay. And this is kind of where it gets tricky because you're like, oh man, price is so I guess to start off, right? To start off, let's compare these two candlesticks right here. Okay. Let's compare these two candlesticks right here. Okay. So um let's see here. All right, perfect. Let's compare these two candlesticks right here. So this one, they both are bullish. They both have the same open. They both have the same low, same open, same low, same high. Okay. But their close is different. Okay. Their close is different. The way that candlestick closed over here is different. But here's the interesting part, guys. Okay. It's a longer wick, right? It's a longer wick. So again, they both have the same high price level. That's what I mean by that. They both have the same low price level. That's what I mean by that. And they both have the same open price level. And that's what I mean by that. The only difference, right, is the close of that price. All righty. So Sylvie just mentioned, right? This one has a longer wick. Those of you guys who understand what is this is a strong open and close. Sellers didn't step in much from the top, right? That's why it's strong. Here, this is communicating something different, right? This one's communicating that sellers step in, right? We got a seller's reaction right there, correct? We got a seller's reaction. Yes, some people call it also rejection, right? Some people call it rejection. Absolutely. So we got a seller's reaction right there. It's a rejection, pressure from sellers, and so forth. Good. But look at this. Look at the terminology that. Oh, good one there, Joe. I like that. So we're gonna write this down here. We're gonna call this rejection. We're gonna call this pressure, selling pressure, sell pressure. Joe mentioned profit taking. I do like that as well. What else? What else? This is seller's rejection too. I'll take this as seller's rejection. Okay. Okay. Inverted hammer, that's definitely a pattern. And then what type of Danimal say inverted hammer? What does that inverted hammer communicate, Danimal? More of a reversal, right? Will you guys say that? Reversal pattern. Exactly. And check that out, guys. You see? We're naming all of it. We're naming this candlestick inverted hammer, which is a reversal pattern, profit taking, selling rejection, selling pressure. So all of this language is communicating what to us? That price can potentially turn, correct? Or reverse, change of trend. In my opinion, that's why people get confused, right? And they're forgetting the most sellers taking over, KG says. And we're forgetting the most important thing. Price open and close what? Bullish, right? Price open and close bullish. So we should continue looking for buys, right? Because the price opened and closed bullish. We should continue taking for buys. So why should we continue looking for buys? Okay, why? Well, because in this one candlestick, okay, and let me hide these candles for now. In the strong candlestick, if we go to a smaller time frame, the strong candlestick will give us a series of candlesticks pointing in one direction, correct? And that's potentially the open, and that's the close. So what's going to happen next from here to the right? We're going to get a pullback, correct? So this stronger stick technically closed strong. So the next candlestick will give a pullback and then it'll potentially continue upwards, correct? And there you go. You definitely answered the question. So this candlestick here, the one that we said was the inverted hammer, the one that we said was the reversal pattern, the one that we said was, it's going to turn around inside of this one candlestick, it already created that movement and this movement right here. So this one already created its low, it created its high, it created its higher low. So this candlestick, it it's ready to trend. Yeah, see that? This candlestick, you have to wait for this to happen. This candlestick over here, it's ready to buy the moment the next candlestick opens and take it to the top. Very interesting, right? It's like we're literally trying to unlearn something that's been basic for very, very, very long time, right? It's been standard basic for a very, very long time, right? And that's why, at some point along the line, since I've been, in this space, I've been, I've been noticing that everyone does have their own perspective, right? And everybody has, it should have their own perspective of things. There's no definite right or wrong in trade. The most important thing, like what do you see, right? How can you find opportunity? And the way we find opportunity, or the way I like to teach opportunity, is okay. Find your impulse, find your low, find your high, and then from there we'll play it up. Let's see. So if the candle closes on a higher time frame, correct, KG. That's exactly what you summarized. Exactly what I meant to say here. What I said there. And we'll check that out right now, Sid. We'll check that out right now. Okay, we'll check it out first. But obviously, again, if you go, I like to use this on the weekly and daily candlesticks. Dr. Latrice, welcome in. No problem. So yeah, so let's kind of put that to the test here. And this is the reason why I love that indicator, guys. Yeah, you guys haven't had access to it. Basically, type in HTF, HTF candle, favor favorite, the one that's made by K Rolo 041. Okay, K Rolo 041. And the full title is HTF candle boxes for LTF, lower time frame charts. Okay, lower time frame charts. There's more, but I like his. I like his. And what does this do, right? So this creates. Let me go ahead and rewind there. Okay, so this is the previous weekly candle, right? We have our low, we got our high. There goes that 23%. So when I go to the 4 hour time frame, right, we're going to see a series now of 4 hour candlesticks all boxed in to what happened the previous week right there. And there you go, KG. Impulse correction, right? The problem with this though, right, is that it didn't technically close down here. It pushed back up and ended up closing a little bit higher than we wanted to, right? But inside of that candlestick, because we had that wick, I believe we probably closed like that, right? We already had our 20, we already had our impulse and our correction inside of that weekly candlestick from the lower time frame view. I'm not gonna just say 4 hour candlestick because you'll see the same structure on different time frames. Yeah, the higher time frames, in my opinion, is best to use weekly and daily, weekly and daily. Okay. And yeah, and here's where we're at. Let's see if we can find some more candles. But again, gold has been crazy bullish. That is hard to read, right? Because look at all these little candlesticks here. See, sometimes these candlesticks here, like these big engulfing ones, right? They don't even get a retracement. Here's probably where a lot of people got stuck here too. Okay, because like, look at these. We got one, two, three, four. Okay, you got this huge engulfing candlestick right here. So you got this huge engulfing candle right here. Okay, this one that I'm highlighting right here. Okay. Let's go to settings and put the midpoint visibility. Okay, you got this huge engulfing candle. Okay, and what do we normally? And then we got one that overexpands above it. What do we normally say from here? Right, price needs to balance this out, right, and then continue. Correct. That's how I was taught. But even before we get to this point, this new candlestick matters, right? That new candlestick matters, and that new candlestick has its own, high and low that needs to work. So I'm gonna gray the bottom one out, and you see here on this one already gave a retracement because you see that wick, and we're very near the 50%. So let's see what happens in the next candlestick. There it goes. Came in, touched 50% of the previous weekly candle, and then it pumped up again. And it pumped up. Uh-oh. Hammer, right? It's gonna sell, right? Let's see how it closes. Oops, it's gonna sell, guys. And that happens. But you saw how that candlestick just danced all over the place, right? Let's do it one more time, okay? Look at that. Goes up, comes back down, goes down, up, down. And then look how this one exploded up immediately, boom, to the top side. Why was that? And Dr. Cheese just mentioned it. It was doing its pullbacks, right? Inside of that candlestick the entire time. Let's go ahead and focus in on this candlestick by itself now. Alrighty. Let's erase this one. And let's go to maybe like an hour time frame. Okay, so only, let me hide the indicators. Exactamente, Pablo. Yes, Pablo's key word right there. It doesn't need rebalancing because it's already balancing itself out on an intraday level with those pullbacks. Absolutely. See, good observation there. Okay. So all of these pullbacks, it's ready to go, right? Like all the buyers and sellers have been present. Yeah, look how this candlestick just played out. So the moment this one closes, there it is. See, the next candlestick. Like, all right, you know what? You did your thing. Let's just go ahead and go. And there it goes. There it goes. So for this session, right, it's just basically we're just trying to identify how price is always trying to balance itself out. Okay. It's always trying to find ways to balance itself out. Okay. Now here's what's interesting. Okay. And this is also a theory that I'm just kind of um, brainstorming. But where were we at? This was, by the way, here goes. I think I have Daniel's chart over here, which you go over as well, where, I think we did it on Wednesday nights. Don't tell me I erased it. I know it's here. Power, rally base rally. It's the Saxo, first the Ovenda. Oh, this is this area. Yeah, we'll come back to this. Okay, so here's the thing as well that I've been noticing, guys, and it's like, okay, it's very interesting. I'm gonna go ahead and erase this chart. And what's catching my attention are these two wicks. Okay, that's what's catching my attention. Those two wicks right here. And let me do it like this. Right there. Okay. So previous day closed bearish. Excuse me. Previous day closed bullish. Okay. We got the low and the high. And we measure that low and the high right here. Okay. I'm just worrying about this candlestick. So what are we looking for? We're looking for what? We're looking for buys. We're waiting for price to come back to equilibrium, correct? And equilibrium at least is the 23%. Will you guys agree to that? At least 23%. That's a good equilibrium level for price to come back to and take off. All right. So let's just move the prices. Buyers are establishing themselves. It comes one, it tests the high of that candle. See a little wick right here. It actually did touch 23% there. Okay, perfect, right there. So this is where, okay, for us, we need at least to balance out the 23%, right? For others, they want price to balance out what? The 50%, correct? But if you think about it, like if you kind of use your imagination, if all this volume here, like let's imagine that let me see if I can draw this example. So this first push down turned around at 23%. This volume that pushed up and then it pushed down here, right? If we were to like, let me see. I am trying to prove. I am trying to like visually illustrate this. And I see your question there, guys. Second. Okay, so we got that volume down. Okay. How are we gonna do this? How are we gonna do this? I hear this. Here it is. Here it is. I think I got it. I think I got it. So we got this pullback here. This pullback was about 900 pips. Then we got this impulse here. This impulse was 500 pips. And then we got this impulse down. About same thing, about 500. But if we were to undo this price action, okay, if we were to undo this price action here, and instead of using the volume up and then bring it down, right? 700, this one here, 5,700, give or take. Okay, right there. You see how all this volume, actually not that pullback, because we need a pullback, right? We need a pullback. I'm talking about, yes, this last volume here. Okay. This last volume here. Okay. It was approximately, yeah, it's correct. It's correct. About 500 foot. So if we don't count that little pullback up, right? And if we just basically copy this to the downside, right? All of this little volume here, if it would have just sold, it would have reached below the 50%, right? but there's just not enough sellers. So technically, price is balancing out, but it's not balancing out all the way down. The volume is still pumping up. Like we still have an impulse, we still got a correction. Sellers moved X amount of pips. Buyers moved X amount of pips. Sellers again moved X amount of pips. But they didn't give us just the because right price does not move perfectly like this, right? It doesn't move that way. It doesn't move, exactly how we want it in perfect N waves, right? So because it doesn't move in perfect N waves, this little price action here, right? This, if we would like unfold the movement, it would literally just give us a that deeper pullback altogether at the zones that we really want, right? And then that's where price basically establishes itself. Nico, right here, yeah, these candlesticks right here, right? It's not that the candlesticks by themselves, it's just more about the range that they move, the range that they provided, right? The range that they provided down, because instead of them having to come down lower, right? They created a range, but it only kept them above 23% earlier. Um, if it was the yeah, what is the movie looking at the lower time frame? Let's check it out. Okay. The analysis. Okay, I got you. Yeah, it's just forming those N's and W's, forming up right there. Finding that support, right? Finding that double W to take it back up. Yeah, so like for example, this candlestick here, right? This one, we got the bullish candlestick, and yeah, like these two were catching my attention because, right, instead of them going lower, it just created the volume to kind of stay above that 23%. So the volume to go lower was there. It just was not in one movement because a lot of times, and a lot of times as well, we get that impulse correction and it just extends. And that impulse does come to about 50%, right? But in this scenario, impulse correction, a little impulse there, and another correction. You see right there. So if we were to unfold that price action, it would have gotten us to a lower area. But because it created that double bottom there, it just completely just took it up. Okay. And yeah, that's for sure. Right on top of the rally base rally, right on top of the 23%, and then price just takes off. Here we go again. New day forms. Some people are still waiting for price to balance out the 50%. New day has established its low, has established its high. So you can fib that high and that low. Okay, and let's see how price moves. And there goes, just wants to pump up. Yeah, even before here, right? I think this is what we were at on the Wednesday night trade lounge. Okay, price just pumped up to the top side. And we said that okay, if we can get a touch back here at the 23% level to balance. Thank you, Joe. To balance our to balance us out, that right there is a good area to buy. Okay. Let it come back, balance between 0 and 23%, and then we can go higher. Look where price is actually turning around at the extension of the previous day, 272. Second, my computer just froze. Let's freeze. Okay, I think I'm back now. You guys hear me?
Yeah.
Perfect. Thank you, Demo. Yeah, perfect. Let's see here. Had a little glitch there. It connected me off to Zoom, and now I'm back. All right. Here is the example that we have. So yeah, so price went bullish immediately. Let's look at how this candlestick look. How it closed before we do that. And there we are, guys. We literally just went through that example. Remember, we went through that example right here as the session was starting out. Okay. This is Monday. This is Monday. This is Tuesday. You know, hey, we're getting seller's rejection. We're getting reversal pattern forming, etc. Okay. Let's box in this candlestick by itself. Okay. And let's measure that movement as well from low to high. Right there. So inside of that candlestick, right, we created the impulse and the correction. But we're in the beginning, we're taught that hey, sellers are stepping in. All the communication that we mentioned is about okay, it could reverse, etc. Okay, let's go to the hour. Okay, and that's the kind of price action that we had for that. Actually, meeting right there. The day has closed. Okay, the day has closed. This one was a little tricky because it went up, it went down, but then it created this little structure right here. And then from there, it never looked back. Right from there, from where the candlestick closed, it never looked back and just continued up simply because it was following that impulse, that correction, that impulse. Here's a correction. That would have been the entry to take it to the extension. All right, so let's follow it along. Better close that and that right there. Okay. Also, too, guys, so all we're doing is we're doing the same thing over and over again. We're looking for a low, we're looking for a high because we have the impulse up because of the daily candlestick closure or structure or weekly candlestick closure. The fib on the right hand side is guiding us where it could price head towards once it makes it there, right? Once it makes it there, it's going to behave like some type of resistance. And then from there, right, we're saying that it can come back to uh, this price level one more time. All right, so let's see how it played out. There it goes. You get the extensions. Price can't overextend too much. What we say, right? Came back and rebalanced out 0.23%. And then from there, see all this little volume that was created here? All that little volume? That could have been, the volume that it wanted towards those lower percentages. New day close, you reset your day, and we do the same thing again. Previous candlestick was bullish. So we measure in that direction, right? We measure in that direction. And this is where we had that trade lines Wednesday right here. There it goes. Price extends again to the extensions. And the idea was to let price come back to that level again between 0 and 23%. Price comes back to it. And that's where we had our big day. Look at that. Boom. All righty, guys. And then here goes Thursday. So this is Monday, Tuesday, Wednesday, Thursday. Okay. During New York, price sold off, but the buying opportunity was still present. Okay. The same pattern that we just did is still present. I know, right? It's so easy now, right? In hindsight, so easy now. Like, oh my goodness. So again, right? The candlestick closed bullish. Okay. Here, right, we could potentially buy from the 23% level. We also had a rally-based rally right there, correct? And the moment price opened bullish, it peaks at the extensions. Those extensions are where people take profit or new sellers step in from there and they bring back price, right, to 23%. I believe in this scenario, it worked out where it balanced out the 23% of the previous day, right? But between the 23 and 38%, excuse me, of the previous day, right there. And again, right, this was an opportunity for us to buy again. Let's see what happens. And there it goes. Why do people lose here? Okay. This is where taking profit is very important. If you get this entry and you go back to that high, I mean, that's a 90 pip. That's a $90 move. That's what, 900 pips? Right, guys? That's what trees would have gone out a long time ago. Sometimes we take more pride in catching a move than making money from the move. Have you guys been in that scenario? I know I have. Like, oh, I need to get this exact move, and you never take profit. Why? Because this is why I did. I'm gonna show them up on Instagram, right? No, yeah. So that's it's all of the things that why people don't make money in trading. All those could be true. Mindset, discipline, etc. And this comes back down to trading plan, right? Oh, I'm a disciple. Is that what you're saying? Like I'm a disciple. But no, the most important thing is how you're gonna make money. How are you gonna make money? Oh, discipline. How are you gonna make money in trading? Okay. Because again, though, right, the moment you get this entry, like, oh, look at this. I got this Instagram entry. Stop loss was just 5 pips. And I'm gonna take it to the moon. Boom. I'm gonna go to break even. Take snapshot of this, you post it on IG, but you never take profit. It's the worst part. After a 900 pip movement, $90 move, and then all that happens. Okay. All that happens right there. So, but check this out. Remember, I was telling you guys this example about like if we were to like unfold this price movement instead of counting the pips down, we count it up, right? This price movement here, because there's sometimes when things do oversell or overbuy, but so this movement down, okay, instead of us counting it downwards, it's a 10,000 with point movement here, and if we count it up, see, instead of the moving coming down, it goes up. we would have been overextended. Okay, overextended big time. Again, we formed a double top. Okay, and we completed this nice M pattern right here. Okay. Um, this is also a very interesting pattern that I like to use, right? We it hasn't been following it to the T like in the past, but it's still valid, right? Again, though, everything has an impulse, everything has equilibrium, and everything has a flip zone. Okay, you know how you guys know how we play the flip zones, right? On a rally-based rally. If it doesn't work up, it'll break it and then retest the center of it, right? And then come back down. You've seen it before, right? We showed plenty of times. Well, same thing with this three candlestick price move. Okay. This price action is supposed to trend price up, correct? This is what we're kind of looking for, right? Let's see what happens after that. Okay, it worked for a minute, for a wick. It did give some price action to the top side. Okay. And then it breaks it. Look at this wick right here. We just talked about the candlesticks, right? Do they work on every time frame? What is this? Even these three consecutive candlesticks, they all gave an impulse and correction, impulse and correction, impulse and correction, right? What can't that's at 2 in the morning. There it goes. So it broke the three candlestick pattern. It broke the three little soldiers, Nico, rebalanced them up right at that same level, and then it seals off. Moves nice through the nighttime. All right, but let's check this out here, guys. Okay, we're gonna look at two candlesticks, and then we'll start wrapping it up here for the session with that candle and this candlestick. Okay, and let's rewind and show. Como lo enseñaron Pablo, sí, pero si la leemos como lo estoy explicando el día de hoy, que es el retroceso o el equilibrio en el mismo tiempo, cambia la historia un poco, ¿verdad? Yeah, Pablo was saying these wicks right here, they're kind of like fooling us because we're taught that buyers are stepping in, wick projection to the top side, doji reversal pattern. Isn't it a bullish type of pattern right here, right? Like a reversal pattern right there.
Yeah, that's the hammer.
Yeah, right. Yeah, that's like a hammer.
However, it's not a true hammer. It's like a beaming star. But that's the thing.
Okay, so we're gonna focus on this one, guys, right? We'll cut up and we'll focus on that candlestick right there. Okay, right here. So again, right, it's a bearish candlestick that already did its pullback. Let's measure that movement from high to low, like so. And you see, in 1 hour, it did the impulse and the correction to about 61%. Let's see how it looks on a 5-minute chart. Okay. And actually, in this scenario, it's not a 5-minute chart. It's kind of like a 2-minute chart. And there it is, guys. Impulse correction. Right? And the neat thing about these higher time frame candles indicators, right? You can box them out in intervals too. So you know what? Instead of using a daily candle, I'm gonna use a 1-hour candle. Let me turn it on right here. Okay. And there it is. See, that's the 1-hour candlestick right there. That's the 1-hour candlestick right there, guys. See how the market is fractal, repeats itself over and over and over again? I normally use this, on the weekly and the daily only, right? But here I'm using this on the these boxes represent each hour, and on the 1 hour time frame is that candlestick that we had drawn. Let's see, impulse correction. Because we already got our correction in that same candlestick, we can market execute the next, stop loss at the high, take profit at the extensions. Why did price reverse right here? Why did I find support right there? Anybody see it? Anybody see it? There you go, Dr. Latrice. I think you didn't know. I thought you couldn't read the fib, Dr. Latrice. And you hear it long enough, right? You start seeing it. 23%. We're gonna try to. If we look left, what's gonna? There's no information there that's gonna give us something, right? There's the 23% price level. It found some support because buyers need to step in, right? And then it comes back and rebalances it out. Unfortunately, no se deja. It's still we're still in a bullish scenario, right? But again, though, and these are the candlesticks that are very interesting, guys. Okay, these are the candlesticks that are very very interesting. These uh well the baby pattern, the baby candlesticks, right? If you guys haven't heard it, most of you guys have, right? This is a what are they called? I think a Haramani. Inside, yes, inside bar Haramani, which I think it means pregnant, based on the Japanese book. Okay, so this is the mama candle. Okay, this is the baby. It's pregnant, or it's called an inside bar because the baby did not break the low or high of that previous candlestick. And only mothers will know when the baby comes out, it comes out, right? And a lot of times there's a lot of volume, the next movement from it. And sometimes they have twins. So there's usually a very strong movement. Triplets in this example. Oh my goodness. Triplets in this example. But again, right, we haven't the control. I think we mentioned it a lot of times, right? The control candlestick, it's still, let me move this to the right. The control candlestick is still this one, right? So 1, 2, 3, triplets. Once one was starting to come out, and then once one came out, all of them came out. And there it goes, guys. But again, let's look at the timing, right? The timing is also very important to these things. This hour, what time was that hour? This was the 2 o'clock hour. Okay, this is 2 a.m. 2 a.m. So then this makes it 3, yeah, 3, 4, 5, 6, 7. Oh my goodness. Seriously. You guys have younger kids or around younger kids, there's that 6, 7. I think I told you guys in the beginning, right? 6, 7. Oh my goodness. Everything's 6, 7. What the kids say nowadays, man. And where timing is important, right? London time created a direction, 3, 4, 5, 6 in the morning. It doesn't really do much. And here goes 7. Obviously, the the 8 o'clock in the morning. Okay. Scenario. But we're going to study this candlestick right here at 6 o'clock in the morning. Okay. Remember this one? It already had closed bearish. This is our entry level. Our entry level was always at the 61%. I'm going to measure the 2 a.m. candlestick one more time. And I'm going to put this line here just so we won't lose it at the 61% level right there. Okay. And then actually, we finally took profit at 6 in the morning, correct? So technically, this one already won. All right, this trade already won, but it just made us wait a few hours. Okay, so this is a done trade based on this 2 a.m. candlestick. So now we're going to focus on the 6 a.m. candle. Let's go back to the hour just so we can look at it properly. 6 a.m. candlestick is this one right here. I dropped. Okay, no, hide indicators. Okay, so this is the 6 a.m. candle. And look how strong the 6 a.m. candlestick is compared to the 2 a.m. candlestick based on the anatomy and based on what we learned. So what does this candlestick need? This one needs a pullback, correct? If we get the high and the low of that candlestick, like that, and then we take it back to, let's say that, it doesn't matter what time frame, to be honest, right? 2-hour time frame, it's fine. I mean, 2-minute time frame, it's fine. There goes that candlestick. It's 6:58. Let's measure that candlestick high to low. Because it's so strong, a lot of times it's going to need that pullback. There it is. So we want price to at least balance out 50%, and then we come back to the extensions. Let's see actually what happened. There it goes. 6 o'clock, 7 o'clock. And then it goes down. All the way down. Huge drop. Huge drop that day. Now this candlestick was beautiful right here. See, this one was beautiful right here. 7, 8 o'clock. The 8 o'clock candlestick was a beautiful one right here. Because you see on that same hour, right? The same hour, we got the impulse and the correction. Yep. Let's measure the 8 o'clock candle. Right there. Impulse correction within the same 8 o'clock hour, right? Look what this candlestick did. It closed below the 23%. We're not getting a pullback the next one, guys. Look at that. Just dropped. This one right here, Dr. Latrice, this little M right here. Is that what you're seeing? Perfect. That's a 2-minute chart. That's in a 2-minute chart right there. So here, right, you know, the new hour stick comes, pulls back. And then it comes back down. How did gold close out? Yeah, it closed back down now. All right, guys. Hopefully you guys enjoyed this lesson here, how the candlesticks moves. Everything is fractal, y'all. I mean, everything is really, really fractal if we want to focus it in that way. I just look at an impulse and the corrections, and there's different variations. There's like 2 or 3 variations, right? For the impulse and correction, in my view. It's actually just, yeah, just two, right? You have your structure impulse, or you have your candlestick low to high. That's literally what I focus on every single time. Okay. Actually, no, I focus on this impulse correction, low, high, higher, low. That's what I focus on. That's the pattern that I'm always looking for because once I have a low, once I have a high, I can fib it and I can make a decision with the fib. Or I look at a candlestick, okay, and I find that low and I find that high. You measure it, and then you find the levels that you want to get in. So we use three of them. We use three of them. We use the forex.com, we use the Saxo, and we use the Oanda. I do alternate back and forth from them. But during the live trading, I've been using Oanda more. We have that FIBO indicator through the COC, where it kind of gives you some trade signals, and that one only works best on Oanda. It's programmed for Oanda. That's the reason why I kind of stick with Oanda during live trading. But I also use these three intentionally because if I mark up a Saxo chart and then I want to mark up a new one like a fresh eye, I just go to the other one as well and figure out. The Saxo and the Forex.com, they're identical. They both open. They're all the same. The only difference is that Oanda, they open their their Oanda opens up their even candlesticks a lot different time frames. So it's more specifically the 4 hour candlestick, right? The 4 hour candlestick. The 4 hour candlesticks opens at midnight, 4 a.m., 8 a.m., and noon. The other two, they open up at 1 a.m., 5 a.m., and 9. So 1 hour difference. And that does change the anatomy of each candlestick. Sometimes sometimes one candlestick is better than the other. Like for example, here, right? It's a good example right here. Let me erase the drawings now. Forex.com has this beautiful rally base rally that I like right there. Okay. But that candlestick opened at 1300 hours, which is 1 p.m. Oanda is not going to have it. See, Oanda is not going to have it. So because if that candlestick doesn't open at 1300 hours, it opens at noon, right? So, that's where it gets tricky. Forex.com will have it and Saxo will have it. So I really like this one right here, guys. I like this rally-based rally right there. This one. It's a really nice one. I would like for price to come to it. So because of that, Sylvie, I'm gonna do the Saxo chart on this example as we close out the weekly outlook. Okay. All right. So let's go ahead and go to same thing. It is interesting. Look at that. We got a wick. All right. So let's in the weekly chart. These are top-down analysis rules. Pretty simple, right? I start on the weekly time frame. I make sure. So in that same candlestick, Sylvie, we already got a pullback. Let's put it like that. In this same candlestick, we did get a pullback already. Okay, that's how I'll interpret it right now. So this is the top-down analysis that we always do. Start on the weekly time frame, find the high, previous weekly high, and then find the low and high range, right? Like that. I do recommend that when you do your top-down analysis, that you do it with the higher time frame sessions. What's it called? Higher time frame sessions indicators. The indicator templates, two of them, your weekly and your daily. Okay, you just need to we don't need the sessions at this level because we're not dissecting the New York session, London session, nothing like that. So we just basically need the one set up for the day and then one set up for the week. Okay, that's all you need. So there it is. So from here, right, I go immediately to the 4 hour chart. Okay, We don't see the box just yet because we need the new data open and everything to open up. But again, look, there goes our impulse and there goes our correction, right? Right in that one individual candlestick. All right, so I usually lock these in place just so I won't move them accidentally. And then from here, all I do is we measure that direction to the top side, like that. Okay. I do have a template for this called previous week, and it blocks out the indicator that way. Okay. We did balance out 50%. Let me see. Just make sure. Yeah, we sure did. Look at that. Price balanced itself out in the same week. It expanded and then balanced itself out immediately. Okay. Now here's what's interesting, guys. Very interesting. These numbers on top of here. Okay. What are those numbers on top of there? Well, that comes with that same indicator. That is the show high and low range in pips. So from low to high or high or low, that's how many pips, well, in this scenario, how many dollars gold moved during that week. So this one moved all last week, they moved $373, which is that correct, guys, or am I doing this wrong? That's dollars, right? So that's 3,000. Jeez.
Yep.
It is, right? Oh my goodness.
Yep.
A lot of movement. It's a lot of movement. Okay. So to me, that's just telling me that gold is strong, guys. The buyers are look how much the buyers are expanding this price up. It's just strong. Okay. I won't do the averages like I normally would because of that number. So I'll just stick with the fib levels on this one. Normally, we do take the last 3 weeks. And let's just go ahead and do it. Okay. You take the last 3 weeks of price action. So we got 373, 174, 139. I don't count the decimals. I just usually get my calculator here. 373 plus 174 plus 139. 686. Divide that by 3. 228. 228. Okay. And I do like it. Okay, because this could be the low of New York. But again, it all varies based on the low and high of New York. I do like to start at 50%. Okay, in this scenario, just to be safe. So we're going to expand upwards from 50%, 228 pips. Let's put it 230. And it's back at the high. Okay, right there. So this is, and we'll call this weekly max. Okay, so same thing, right? If it will go the opposite direction, 228, we'll just clone this and same movement. It can go as low as here, but we're more bullish than bearish, right? So I don't like to give 100% of this because we're more bullish. So let me just give, let's say 60%. So 228, I'll multiply it times 60%. It's 137. Okay, 137 to the downside. So from the 50%, 137, right there. And right near that 78%, Dr. Trees, which is also very near the previous daily high, previous weekly high, excuse me, right? So that's kind of the target. So let me go ahead and put the weekly max to the downside. We'll color this in red. And I'm gonna put it at 78% because we know how that level works. Institutional level. There it is. All right. And all from here, guys, we just got to use our imagination. What pattern is it going to create? Is it going to simply just do this and then wave? Is it going to do this, this, and then this, and then this? Okay. I personally, I am more in favor of that M. Okay. I like this 4 hour. Where's there? Right there. I like this 4 hour rally base rally, rally base rally. Okay. Right there. I told you guys I love this. I love this rally base rally here. This is a flip zone rally base rally, right? Yeah, thanks for that one, Ron. It's a flip zone rally base rally. But I do like this one right here. Right there. It's in between the 50, it's in between the 61%. Actually, no, it's right at the 61%. Alrighty. I would love for price to get a little rebalance this about a little bit. We have we have three consecutive bearish candles, balance out halfway, and then find a way to, yep, buy first, then balance down, then we buy. We buy to Dubai. All right. That's what I would like for it to happen. And then we buy from here. Okay. This is the technical setup based on every fib. Your stop loss is at a low. Now that's my head and shoulders on the trees. It needs to form it. But again, look good, right? This is a reversal pattern, right? We need to see some kind of price action like this for it to go lower. Absolutely. And there you have it, guys. See, we only use two time frames, was the weekly and the 4 hour chart. And we got our whole map, our potential whole map, right? For the entire week. And now, before we close out, let me just share this chart with you. And then let's see if we can find some more patterns only in what we drew from here. Okay. Let me go to the daily. Okay. All right. There's the daily view. We closed bearish, correct? A nice little wick. Actually, let me do this before I go further. And we'll wrap it up here in 3 minutes. I know I went a little bit over time. So this candlestick closed bearish, right? So it has its high and low range, correct? Middle line. So we do have some selling pressure in that area. So the previous day was bearish, correct? Now let's go to the 1 hour chart. And there goes the price movement. Actually, let's stick to the 4 hour chart just so I won't confuse anybody. Okay, because we're still in that same area. Alrighty. So this is Friday bearish movement, right? Once we have the low and high of Friday, what do we do next? We fib it. We measure it from high to low, right? And look, where can sellers potentially step in? 50%, 61%, 78% of the fib levels. That's exactly where that flip zone rally base rally is at. And again, that pattern is there again. Impulse, correction. Let's see if sellers can step in here. And then we bring it back down to the extension. And look what's at the extension. That 4-hour rally-based rally that we're trying to target. So
the only thing I see that might be in our way is this BEC right here, which is where we closed at, which, we have to definitely get this next candlestick to drop in order to at least, you know what I'm saying?
absolutely that. Yeah, and like we just talked about earlier, right? We talked about earlier, right? We're like, if price cannot break this and starts forming double bottoms and triple bottoms, this price movement, if we kind of like unfolded, all that price movement could have been our pullback to the buy low area. And just this little consolidation here is just the volume just to turn it back around. Absolutely. Yep. Yep. Absolutely. But I think we are going to get a buyer's reaction. I think we are going to come back and test the 23%, right, of that previous week. And sellers could step in here, right? And yeah, we'll see. But yeah, guys, great lesson, in my opinion, on how the market is fractal. Even myself right now, right? It's like I'm just noticing how just everything repeats itself. Okay. We have a good markup strategy, guys, where we have a good idea of where price could go, even though with everything going on in the world, the charts look technically clean. However, right, trading it, it's a whole different perspective, guys. Okay. Trading is a whole different how you trade it, how you make money off of it. That is something that if I teach it to you, it's still very hard to duplicate, right? It's still very hard to duplicate because emotions comes in, how much money you want to make comes in. And again, though, right, the best value I can give yourself is just helping you read this sessions as best I can, okay? So we can, really benefit from price movements, right? And then from there, you start seeing the market, a lot better with your eyes, right? With all yours. But yeah, I like this setup, guys. I really do like the setup. I would love for it to complete that pattern, and let's see if we can get that price moving that we want. Gracias, Pablo. Ahí estamos. We'll begin to wrap it up, guys. We'll see you guys tomorrow. Tomorrow's my Spanish day at COC, but any charts we'll share them with you guys through the Telegram. We're more active on the WhatsApp on Wednesdays and Sundays, right? But anything else, you're always more than welcome to reach out through the WhatsApp group. It just helps everybody, and we go from there. So appreciate you guys coming in. We will close it out. Have a great Sunday morning, and we will see you guys next week. Gracias, Pablo. Ahí vamos. Bye-bye.